Hey, what's up, everyone? Welcome to Tuck Notes Beginner Stock Talk. Tonight, we're going to talk about Tesla stock. We're going to talk about the overall stock market, what happened on Friday, why did it crash, what's going on. So, basically, we're going to be hearing from Cathie Woods in a movie or in a short clip about what she has to say and think about Elon Musk's comment about him not feeling super good about the economy. And so, with that, Tesla closed at $703 on Friday. It was down 9.22%, which is $71.45. Unfortunately, we were trading really good throughout the week. We had a little trend going up, all the way at like a 9% trend. And then on Friday, when that tweet was released, everything just sold off to downside once that comment was made out. And the only stock sector that did well still was the gas sector, so that was weird. The sell-off also was fueled by, this is by Yahoo Finance, it says exclusive, Tesla's Elon Musk feels super bad about economy, comma, needs to cut 10% off salaried staff. Relatively bearish comment is what was made. The employment numbers, as we were going to get out, went up. Unemployment numbers, not employment. And Tesla's basically sitting at a support level of $700. However, if we have another sell-off week next week, we could see Tesla going between 700 and 600 between $700 and $650. That's another key price level to be on the watch out for. And now I'm going to show you the video about Cathie Woods, what she thinks, what she's anticipating, what she's expecting, and I'm going to shut up.
Very interesting comments on the economy by business leaders. Just yesterday, I believe, Elon Musk said that he has a super bad feeling about the economy. And we're trying to figure out what he's looking at. We know his own sales were up. Tesla sales in the month of May, I believe we're up globally 60%, and almost every other auto manufacturer sales were down, and some of them down by a lot. So it's not his own sales, except perhaps at the margin, maybe something that he's seeing in orders. He may be reflecting on the decline in total auto sales. So that's interesting. Jamie Dimon at JP Morgan talked about a hurricane. Be prepared for a hurricane. He doesn't know what kind of hurricane. Is it going to be a mild one, or is it going to be a Hurricane Sandy, which would be quite serious? But I think he's changed his tune a bit in the last month since JP Morgan reported earnings. So what is he saying? Well, he sees a lot of business activity and must see it slowing down, if I had to guess. And the president of Goldman described this environment as a confluence of shocks that in his career has been unprecedented. So again, he has a very good perspective, global perspective, every sector. And so I would say at the margin, these three business leaders are seeing the economy in some form of stress. Now, one of the issues we've been focused on with you on this video is the inventory buildup that was likely, and we've been saying that through the last year. And it took a while to get through some of the supply chain issues, but now we are seeing inventory increases, the likes of which I have never seen in my career. And I'm talking about on a company by company basis. So Walmart, as Nancy and I mentioned in this last YouTube video, Walmart sales up 3% on a comparable store basis year over year, which means they were probably down in unit terms. Inventories up 33%, which probably means in real terms, taking away inflation, they were up 25 to 30%. Well, that's interesting because more than half of Walmart's sales are in groceries. And you're not going to see huge inventory buildups in groceries. And so what does this say for the other half? Are their inventories 80%? It's kind of crazy to think that that's a possibility, but it's a possibility. And Target's inventories were up 42%. Now it has less in the way of groceries as a share of the total. So 42%, maybe if you X groceries, was up 50 to 60%. These are crazy numbers for two of the best managed companies from a supply chain management point of view in the world. And so maybe a Jamie Dimon is starting to see this backing up in other ways. Surprisingly, auto sales. Now, the auto manufacturers finally are getting through supply chain issues. And according to Ward's, their plans were to increase production, or they're in the midst of increasing production to something like 20% this quarter. And what we got this week was kind of surprising. Auto sales dropped back down from 14.3 million. Now, steady state is 17 million. So they had not even gotten back to steady state, which is 17 to 18 million. And that's an annualized unit rate per year for the US. So 14.3, and the expectation was that would just continue on up to a more normalized rate. Well, instead, in May, it appears auto sales dropped 12.7. So here we are again. If they build the inventory and the consumer does not come, in fact, the consumer retrenches, these companies are going to have too much inventory. What a surprise, given all the supply
chain we have and problems. And so basically, that's the end of the video. If you want to get into, like, if you found that really helpful, on YouTube, you can subscribe to her channel. Type in ARK Invest or In the Know in the search engine, and you'll see that beautiful face right there pop up, and just push the subscribe button. Meanwhile, back to my channel, it'd be cool if you like this video, push the like video, that'd be cool. And if you like these videos that I'm making, it'd be cool if you subscribe to it. I really appreciate the people that actually have been doing it when I'm saying this, and you subscribe. It's just like it's a good feeling. Makes me feel like I'm doing something right. So anyways, I'll see you guys on the next one. Late.